coming to you is we have the Fed meeting, which is lined up today. Plus you have the RBI, which went ahead and increased interest rates by 40 basis points. What's the incoming to you is we have the Fed meeting, which is lined up today. Plus you have the RBI, which went ahead and increased interest rates by 40 basis points. What's the impact that we are seeing with regards to the commodities market?
Okay, now commodity market is discounting all this very well in advance. So like Federal Reserve is behind the curve, RBI was also behind the curve, Fed was also behind the curve. So today, ahead of the Fed meeting, RBI has raised its repo rate by 40 basis points, and this is a very good sign. In fact, if you look at what has happened with the inflation in India, which is shooting up quite sharply, the way agricultural commodity prices are moving up, the way oil prices are moving up, the way gas prices are moving up. So inflation is moving up quite rampantly. We cannot be accommodative stance. We cannot maintain that accommodative stance. So if you ask from the economic point of view, it is a good decision by RBI to hike the 40 basis point rate. And it will be good decision by Federal Reserve also to hike the interest rate by 50 basis point. So whenever the interest rate moves up, or whenever there is a liquidity from the system goes out or is being sucked by the central banks, at that time commodity tends to go down, and that is what has happened quite ahead of these meetings. So before Fed meeting, copper is down from 820 to 760. Before Fed meeting, we have seen gold from 55,000 to almost 50,600, 700. So the beauty of these electronic markets is that they discount all these future movements well in advance. And when the event take place, at that time, you may not see a major impact. So today is going to be one of those days where after the interest rate hike by US, the speech will be monitored carefully. But my sense is that tomorrow, initially, after the rate hike, gold or silver may go down, but tomorrow it will move up. So if you get the gold at decline, say for example, 50,300, 50,200, I don't know how long it can go, but the dips should be bought, and tomorrow it can give you some good pullback because it's already discounted. No reason for, no fundamental reason. Its prices have discounted this event, and that's why tomorrow we are going to see some pullback. So we are going to see a minute pullback in gold and silver tomorrow. As far as crude oil is concerned, there is a major event happening in crude oil where European Union is planning to impose sixth round of sanction, which includes ban of Russian oil. So I was looking at the data. Russia is basically accounting for 25% of Europe's oil demand. And if that is not, they are not importing that, then I think it is going to create big problem for oil market, because then Europe will move to some other destination for buying its oil, and that will create artificial shortage in the market. And hence oil looks positive for the day. And I am recommending to go long in crude oil at 8,060, 70. And you can wait for the upside target, in crude oil around 8,200, 8,220 are kind of targets you can expect during evening session or maybe tomorrow. So crude oil, if this decision takes place, can go up. Not very bullish because of the rate hikes cycle which is coming on. Metals, sell on rallies. China lockdown continues. China economic growth slowing down. Global economic growth slowing down. So no room for metal prices to shoot up. Bounce will come. Again, 870, 770, 775, copper, 46, 47, aluminum. These are the levels where you should start going short on metals because of the slowdown in demand. My view continue to remain pessimist. I'm pessimist on the outlook of base metals, and I'm expecting further downside in base metal complex. So sell on rise for metals. Gold tonight's decline should be used as a buying opportunity for maybe tomorrow we may see some gap up opening, or after during the day, we may see some upside, and oil continues to look up, oil and gas both.
Right. So that's a mixed view coming in terms of the overall commodities market. Some buys, some sells coming in across. But thank you, Kunal, so much for joining us on the show. I think you've answered majority of the questions as well in terms of copper, gold. Anything in terms of nickel, Kunal?
I think it's very difficult to answer when the volumes will come. I think it's a wait and watch game. So that's why I'm not recommending nickel.
Thank you, Kunal. Thank you, participants, for joining in.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.